Hey, what is going on, Bulls and Bears? As you can see on the top of the screen here, this is the housing crash update. Now, first, I've got my headset on today because I've got a noisy fan in the background, so hopefully there won't be any interference. Let's talk about the housing market. Now, first of all, why am I calling it a housing crash update when I said home prices wouldn't crash? Well, that's because that's what everybody else is calling it, and that's what people are searching for. People are searching for when will home prices crash, housing crash, news, stuff like that. So you're not going to get anyone to watch your video. Well, you might get some people, but you're going to get more people to watch the video if you put the word crash in there. Not because prices are crashing, but because that's what people are searching for, and they're trying to find the answer to the question, when will home prices crash? So this is why I call this the housing crash update. Not that prices are crashing, but when will they crash, and will they crash? Let's go ahead and get into the news. Now, first, let's talk about what's happening nationally. Now, keep in mind, this is nationally, so some cities may be seeing bigger price declines. Other cities may be seeing lower or less price declines. Some other cities might even see price increases. But here's what we're seeing nationally when we look at the entire U.S. housing market. From July to August, month over month, home prices nationally dropped from 449,000 median home price to 435,000 median home price. That is less than a 1% drop month over month. Now that brings us back again to what we talk about. Is it a crash? Is it not a crash? Some people out there are calling this a crash, less than 1%. Other people are just looking at certain cities that are coming down even faster in prices. For example, here in San Diego, prices went down 5% so far, and some people are calling that a crash, right? So again, when we say the word crash, are we talking about just one city? Are we talking about nationally? So let me know what you think down in the comments. I don't think a 1% drop nationally on home prices is a crash, but is it going to lead to a crash? What if it's 1% next month? What if it's 2%? And what if it's 5% that we're talking about 10, 20%? Then will we call it a crash? And are price declines going to accelerate, or are things going to level out? Well, I think price declines are going to accelerate. And I know it's not exciting to only see a 1% drop in home prices. So what can I do to make it more exciting? Ready? Here we go. OMG! OMG! Home prices are going to crash. Next month, home prices are going to drop by 50%. And then the month after that, another 50%. There's going to be a zero cost homes because it's going to be a 100% drop. Homes are going to be free. Free homes for everybody. Okay, if that were to happen, lasers would come out of my eyes right now. Oh my goodness, oh my goodness, oh my goodness, oh my goodness. But there is some good news for those waiting for more affordable homes. This price drop, even though less than 1%, that's right, less than a 1% drop was the biggest plunge in 6 years because the housing market's been in such a mania and such a bull market with all these ultra low interest rates. And then in 2020, technically the housing market should have taken a big dive, but what did they do? They came in with all these rescue programs. They canceled foreclosures. They sent out record amounts of stimulus to help people get by. They put a pause on other forms of payments and loans, like car payments, student loans, even utility bills. Right? And all that together rescued the housing market. But now we're seeing the repercussions of an overinflated housing market. And we're just at the precipice of the decline in the housing market, in my opinion. Unless they come out with massive new programs, this is the beginning of a big housing downturn. And I told everybody, I have to pat myself on the back a little bit here. I told everyone that this would not be a crash. I said prices were going to start coming down the second half of 2022. People said I was wrong. No, JJ, it's going to crash. Mortgage rates have doubled since January. There's going to be a crash. Well, if you want to call it a 1% decline, a crash, go ahead. But we predicted exactly how this was going to play out. Now, I think the decreases nationally are going to increase. So next month, I expect to see a 2 to 2.5% decrease. The month after that, 3 to 4%. And these numbers are going to compound. And over the next, I'd say 6 to 12 months, we're going to see significantly lower home prices in most cities. But yes, I still don't see a crash. But now here's some other numbers to factor in to this housing data to tell us what's happening in the housing market. In August, the national inventory of properties for sale jumped by 27%, with 166,000 more listings compared to last year. So 27% more than the previous year. Pretty big jump. And as things continue to get more difficult for the typical homeowner, I expect more homes to come on the market. So I expect this number of properties for sale to increase because everybody's feeling the pinch right now. Everybody's feeling the pain. Even people that bought their home 5-10 years ago still have such high costs of living to deal with. A lot of them are considering selling. The big sticking point is people are looking at rents and they see rents still high and actually going higher in most cities, and that's causing some hesitance for homeowners to sell because they're looking at the situation. They're looking at the situation and they're saying, where are we going to live? Because rents are high and going higher. So you have this situation where they're between a rock and a hard place. If they sell, they'll still get a pretty good return on their home, especially if they bought it several years ago, but yet now they have this high rent to contend with. Now let's go over some more numbers. The median amount of time a house spent on the market increased for the first time since June 2020, lengthening by 5 days, and now it's up to 42 days, the median number of days that homes stay on the market before they are sold. Next, the percentage of price reductions rose from 11% 1 year ago to over 19% this year. So more sellers are cutting their asking prices. And like I showed you a few reports ago here in San Diego, we're seeing some pretty big price cuts. So that's going to mean bigger price reductions. And that's going to mean lower sales prices down the road, which we're going to see in October, November, and December when we get the numbers from the current month. Now let's focus on new home inventory for just a minute here. If we look to the far right here, the number of new homes for sale on the market is approaching the peaks that we saw during the 2007-2008 peak of the housing bubble. And every time we've seen a spike in new home inventory, we have seen a recession. The recession, you can see that in the dark colored area. So look, almost every time we saw a spike, there was a recession. Now, technically, we're in a recession now. Of course, I think a lot of us know what happened. They changed the definition of recession. Instead of 2 consecutive quarters of negative growth, they're now looking at the unemployment. And that's ridiculous because you can have 100 million people making minimum wage and they still would not call that a recession, even with everyone going into massive debt and record levels of debt, just like we're seeing right now. Now, let's talk about what could prevent this housing bubble from popping and what could prevent the housing market from crashing. Institutional investors and cash buyers. Are they still buying or are they dumping properties like some have predicted? Well, here's what we need to keep an eye on. Out of KSL, cash buyers make up almost 1/3 of all home purchases. And this is what I predicted several months ago. Remember, I said there's a lot of cash buyers. There's big institutions on the sidelines that are going to scoop up homes, especially when we see prices go down. I wouldn't be surprised to see investors and cash buyers scoop up 35, 40, 45% of all homes as home prices go lower. So that is the clouds, the storm clouds above what some people are looking at as better days ahead, right? So you're looking to buy a home, you're still going to have to compete. All right, so to me, this is the unfortunate part of the housing market. And how many people that are saving up a down payment today that are going to get financed and get qualified for a mortgage down the road when homes become cheaper, how many of them are going to be outbid by a mega corporation, by a cash buyer, by an institution? All right, so do you agree with me or do you disagree with me? Please let me know down in the comments. I think we're going to see cash buyers come in and scoop up 35, 40% of all homes, maybe even 50% at some point, because the average person is going to be so far in debt that they will have to qualify for a mortgage to try to buy a home still in the future. One, less people are going to qualify for mortgages because of the dings on their credit and the debt and the late payments. Plus, they're going to be competing with these cash buyers. Or do you think investors are going to dump properties and we're going to see a massive downturn in the housing market with investors pulling out of the housing market more of a move away out of the housing market versus more heavily getting into the housing market. Which way is it going to go? Please let me know what you think down in the comments. That's what I think. Hope you guys like this housing update. Keep stacking. Stay prepared. Thank you for supporting this channel. Bye for now, everybody.